This lecture, it's very important inside this domain, which is assets evaluation. And we're gonna also explain some formula to calculate the risk and to calculate or to evaluate the effectiveness of the control. So this is the only part inside the course that has some formulas that you need to memorize for the exam. Now, on the previous lecture, we explained the risk, what is the risk, how to identify the risk, how to manage risk principle, how to mitigate and avoid or accept, and what is the definition of those principles or transfer. Now, this was just an introduction. The previous lecture was just an introduction. Now, on real life, how do we implement risk? From where should we start? So to be able to identify or to do a risk assessment or to choose some countermeasure to reduce the amount of risk, we need to start with evaluating our assets. So the first thing we need to do inside the risk management, it's to identify the value of our assets. Now, in assets, we have two different types. We have the physical assets like hardware, like shares, like tables, and this is actually, it's not the main assets that we are looking for, but it should be considered. Computers, hardware, printers, and so on. But the really important assets that you need to evaluate will be the data asset. So data or information assets, this is the important part. Imagine that you are working in a bank. The bank has some devices or some physical assets. He got some computers and some printers and some scanner, fine. Those are easy to identify their value. I can tell you we have 1,000 computer or 100 computer. Each computer has been bought with $1,000. So our physical assets worth $100,000. But can you tell me how to identify the assets, the information assets? What is the value of the bank information? If the bank lost those information, how can you consider the loss of the bank, or how much would be the loss of the bank? I mean, it's easy to calculate that if we are talking about hardware. So the information and the data, those are the assets that's taking some effort to evaluate their value. We also have software, but also software is easy to identify the value. Now, before start explaining the formula, I'm going to talk to you about some different techniques that is used for assets evaluation. So we have different way. We have the inventory. If any organization has an inventory system, we can refer to that. We have assets management system or accounting system. Those will help, the first three one will help in evaluating the physical assets, because inventory will include all the hardware and their prices, or the accounting system. While this one, please take a note about this one, Delphi technique. It's a technique used to evaluate the information assets, and it depends about expert opinion and survey. So the key word here is expert opinion and survey. We are doing survey to expert people to be able to identify the value. So you are not requested to understand how it works, but you need to know what is Delphi technique. It's a technique that is used for assets evaluation, and it depends about expert opinion and survey, anonymous survey. So if you got any question inside the exam with those keyword, what technique is used for evaluating assets based on expert opinion or survey, it should be Delphi technique. Now, here is the important part in this course. In this domain. Assume that I was able to calculate all the assets values that I have. The tangible assets, things like the hardware, the computer, things like the printers, tangible, and the untangible, the assets like information and data. And I end up that my assets value, both of them, equal 100,000. I'm going to put simple number for simplifying. 100,000. So my assets value will be 100,000. The second part of the formula will be, and whatever I'm doing right now, it needs to be done for each threat or for each vulnerability. So assuming that we are talking about fire. So first I did calculate all my assets with 100,000. The second value that will be given to you inside the exam is something called the exposure factor. An exposure factor is usually a percentage. So exposure factor, it's a percentage, and it represents the amount of loss that will happen if a specific vulnerability or threat has been exploited. So if you are talking about fire, to calculate the fire, we are saying, okay, we have our assets, tangible and non-tangible, are worth 100,000. The exposure factor of the fire will be 30%, meaning that if a fire happens, my loss will be 30% of the assets value. From where they are getting those values, there is different way for getting that. There is some standards, there is historical information, but actually inside the exam, you will be giving those information. You have one vulnerability that we are analyzing, and he will give you the assets value is that much, the exposure vector is that much. Then you need to calculate something called SLE, or single loss expectancy, which is equal to AV multiply EF. That means every time the fire happen, how much we're gonna lose. So it should be 30% multiply 100,000, right? So it will be 30,000. So the first formula that you need to memorize will be the single loss expectancy, which in our case will be 30,000. Then he will give you another input. So 3 input you should have inside the question, and you need to calculate 2 formula. The third input, it's called ARO, or annual rate occurrency. That means this vulnerability that we are talking about, how many times it happen per year, and it's usually an integer. I mean, if it happen 1 per year, so it should be 1. If it happens 3 times per year, it should be 3. What if it happen 1 every 3 years? It should be 1 over 3. It should be 1 over n. The formula should be 1 over n, where n is the number of occurrence of this event. So if we are talking that this event happened 1 every year, so it should be 1. What if it was 1 every 3 years? N is number of year. So it will be 1 over 3. So we are talking about 0.3. So the ARO will be the 0.3. So ARO is the annual rate occurrence. Now, the last formula that you need to calculate, so you have 3 input and you have 2 formula you need to memorize. The input that will be giving to you will be the AV, assets value, will be the exposure factor, which is the amount of damage that will happen if any vulnerability took place, and will be the ARO, which is the annual loss expectancy. And we should end up with ALE, annual loss expectancy. According to that, what is my annual loss expectancy from the fire? Should be SLE multiply ARO. So it should be 30%, 30,000 multiply 0.3. Let's open the calculator. sorry, calc. So we are talking about 30%, 30,000, 1, 2, 3, multiply. By the way, you'll be allowed to a calculator inside the exam, 0.3, and the value should be 9,000. So our ALE will be 9,000. Okay, so what exactly that mean? That means I should not spend on fire equipment more than 9,000 per year, because the amount that will, the loss from fire will be 9,000. So it doesn't make any sense that my loss will be 9,000 and I'm going to spend 20,000 on fire equipment. So this is a very important part inside risk, the cost effectiveness. It's not about just implementing the latest and the greatest technology to reduce the risk. It should be cost effective. And actually, sometimes inside the exam, you will not get the question that straightforward. But he will give you a scenario. He's going to say that a team is working on risk in an organization, and they found that the assets value is that much. They found the exposure factor. This is the ARO. And they will give you how much the company spent. So he will tell you the company has spent 14,000. Is it cost effective? Plus or minus? So you need to calculate to understand how much they actually should be spending and how really they spend according to the question. And you give your opinion, this is not cost effective, this is minus 6,000. They spend more than should be expected. So this is very, very important formula that you're going to need to memorize. And as I told you, the inputs that you'll be having inside the exam is that, and the assets value, the exposure factor, the ARO, and you're going to need to calculate SLE, and you're going to need to calculate ALE. And your objective is to understand how much you should spend on each thread, because you do that for each thread. Fire, hacking, physical security, any threads that you should expect, you should do this calculation to be aware how much we need to spend on this specific control. So very, very important formula. Please write them down. Okay. Then the part or the vulnerability usually is coming from different places. So it could be theoretical, it could be actual exploitation, safety. So vulnerability could be different kind of vulnerability, physical, in technical. We should consider all kind of vulnerability and do the formula that I just show you. The area of vulnerability also, physical security. People who's working in operation should be analyzing the physical security vulnerability, electrical, software, network, personal. Risk type, we have the man-made risk, which is something like internal risk, theft, employee mistakes, or natural disaster risk, things that you can do nothing about it. So if you are in an area where there is a lot of tornado and flood, you have to work with that. I mean, you can do nothing about it. So when we are doing risk, we need to identify all the risks that we are expected, right? But when you do that, when you start sitting, and you should, because actually this is not easy to sit and to start thinking about everything bad that may happen in different area, in physical security, in technical security, in personnel, in HR. It's not easy, but you'll end up with a huge amount of risk. So I cannot assign or put a countermeasure for each one of them. It will be endless, because sometimes you have thousands of risk, not just 100. So after identifying your risk, we need to identify to determine the probability and to put some priority on the risk. Some priority need to be taken into consideration. Let me give you an example. Assume that we are in an organization and we are doing a risk assessment. So we start identifying the risk. Now, this specific organization exists in a city where there is a lot of tornado and flood. So this has been considered as a risk because it may happen and it may end up with closing our business for a few days until the problem, losing some customer. I need to consider that. But also we have a risk, for instance, for earthquake. But this is very, very rare that happen. I mean, it happen every like 20, 30 years. Now, if I have a budget to buy some control, should I divide the budget equally on those two specific risks? Definitely not. I need to give one of them more priority than other, because according to that, the tornado is happening every year. So the probability of happening is very high. So I have to assign a budget for that. While the other one need to be considered, but since it's a very rare threat, so I need to allocate lower budget. So when we are doing that, the identifying risk, you need to put priority because you will not be able to mitigate all kind of risk. In doing priority, we have a qualitative and quantitative analysis. Quantitative means I'm giving a priority according to some number I have. The last 10 years, a fire happened every year. I know this is very, pessimistic, but for instance, so I'm putting priority according to number. While qualitative risk analysis mean identifying the probability of the risk, but based on the best practice. Like I'm saying this most likely to happen. I cannot put the figures, but I'm putting most likely or will not happen. So I'm giving names, but I cannot give numbers. So this is how to identify the qualitative analysis. Likelihood, we need to know the risk, we need to know the impact. This is the formula I was telling you about, extremely important. And you should understand what is a qualitative analysis and quantitative analysis. Very important thing about the safeguard or about the countermeasure, it should be cost effectiveness. You will be requested to evaluate the effectiveness of the cost from the question. It should reduce the risk. You should not implement a control that will increase the risk, and it should be practical, not a theoretical part. So when you implement a control, it should match those points. So you should not suggest theoretical things that cannot be implemented. But the first one, cost effective, and this is what he may ask you inside the exam. And as I told you, it will not be a straightforward question. He will give you a scenario. He will tell you how much they spend on countermeasure, and he will ask you your opinion. So you need to calculate, and you need to get the annual loss expectancy and to figure out what is the better amount to be, or the best amount to be spent on this specific risk.